I'm Greg Hunter. Welcome to USAWatchdog.com. With us, a real treat. It only comes on about once a year. And I'm happy to get him on one-on-one because he's brilliant. He's Mr. Gold. He's an expert in gold. He's an expert in markets. I mean, when you're trading gold, you got to be an expert in everything. It's like Bruce Lee. You have to train every part of your body because you never know what you're going to need. I'm talking about Jim Sinclair of JSMindset.com. Jim Sinclair, thank you for joining us today on USAWatchdog.com.
I'd be happy to be here, Greg.
Yo, last time you were on, you and Bill Holter, you said, if Trump gets elected, we'll have a market crash. And everybody yawned at this, but the futures overnight, 800 points straight down, 900 points straight up. That was a 1,700-point round trip, and everybody yawned. We did get a crash. We did hit an inflection point on the day after Trump got elected. Now, is it all over? Is everything good, or are we reaching another inflection point?
No, the question at that time was, would the machine that operates for the Clinton operate for Trump? Okay? And the machine is the plunge protection team, but more so it's special algorithms, quants, you name it. They bring it in, and it basically trades spreads for the big moves. So the question is, now we've got Hillary out by surprise. We've got Trump as at least at this point as president-elect, and the market turns around for no other reason but it got turned around. And when the machine, that's people and computers, funds and institutions, Federal Reserve and other central banks, all acting simultaneously in one direction, the next thing you know, the market was up a few hundred. The inflection point, by definition, or by my definition, just so we don't get into semantics or arguments over the meaning of words. For me, an inflection point would be a point that you go to after which, for a very long period of time, you never see those prices again. A high or a low would be an inflection point. And what the viewers need to understand is I'll recommend a very simple exercise to really understand it. Markets don't exist anymore. They do not exist. Or you got a price, but you don't have a market. Everything is in virtual space. It's not in a 3D world. And if you go down, and you should, go down to the floor of the New York Stock Exchange, you'd be aghast at how few people are there. The financial stations which bought space to show their product from the floor, they have to have people come down from their offices when they have a guest and keep walking around what once was a specialist station to make the camera look as if the floor is crowded. There usually be in that building somewhere around 6,500 people. If there is at any time on the floor more than 30 people, it's probably some kind of a crisis going on. There literally is nobody there. And there's a huge message in that. There are no more specialists. There are people with name specialists, and there are one or two who still live in the 50s and 60s and actually make markets. But now what you've got is a computer, and the person operating that computer for some major bank might be called a specialist in a stock. Now, anytime things go wild, there's no capital commitment by specialists who, when the system was working, had the obligation to maintain an orderly market. Specialists make a huge amount of money, so they would know they're going to lose, but they would do their best to maintain an orderly market because they didn't want to lose General Electric or Xerox or IBM or whatever was trading in that day. There's no more capital commitment. So when the markets go wild on the upside or the downside, which they did both on election day, nobody is actually in the pit to whom you would ask the price of a market, who would give you a bid and ask, and if you asked the size, would give you the size of the market and be obligated to trade that size. It's a computer. The so-called specialists, when you get into a situation like election day, simply walk away from the computer. Let the computer take it. And that's when things start going wild.
Do you think we're at that point right now? Do you think that we're at the point where things could go wild with nobody really at the helm, nobody really controlling things?
Sure we are. But don't call that an inflection point, because it gives investors an idea that the price they're looking at then in virtual space, the Dow somewhere around 1900, okay, above 1900, 19,000, that they're, they think that inflection point means whatever that number is, they'll never see it again. There is no guarantee, okay? There is no market. That's why this market can do, in general equities, the strangest things you could ever conceive of, and that's why gold can do the strangest things ever conceived of, because in virtual space, there never will be an inflection point that can be determined by all of the general tools, from value equations to technical analysis. Take it all and throw it in a basket. We're trading virtually between computers, and gold will, in fact, find a steady price when it's reset by the world, not by any central banks. You had the Fed trading. You had every central bank in the world trading on that day to keep things relatively okay. But I believe that the Clinton machine realizes now that they don't have to trade for the best interest of the government, of the currency, of anything except themselves. I don't believe the Clinton machine can be hired by Donald Trump. I can't see any deal that can be made that way. I'd say that the machine now will be totally loyal to itself and whatever its positions are. If they're buyers on a 900-point drop, okay, good. You can end up 200 points. Gold, whatever the fashion of the day is, until something spectacular happens in gold, which shifts the price determination mechanism from the computer to physical gold, which can't be run by a computer because you have to make delivery.
And lo and behold, Erdogan, and I don't want to interrupt you, but Erdogan is telling its citizens to buy gold in the lira, buy physical gold.
Well, for a very simple reason. Just turn around and take a look at what just happened in India. Okay, you want to if you suspect that you might withdraw from the euro, it's a currency change that could be the same as the currency controls implemented in India by burning the large denomination notes. The country has rolled over backwards. For whatever reason they wanted to do that, they have literally killed billions of possible consumers. And gold traded up to 3,000 in India on that move. If Modi in India was to go any further, such as declaring a ban on importation of gold, Modi would end up back as what's called a teawala, or a seller of tea to people getting on trains at train stations. It is to the Indians almost a spiritual, religious concept, and it has been since the beginning of time. We are in a situation where there is no precedent. When you opened up our conversation, you said that in order to trade gold, you had to know everything. Well, to a degree, you were right. But you forgot two words: in history. Because you'd look for precedent, something that happened before. And if you could find a precedent, a previous occurrence, then you could intelligently come to a conclusion with some degree of certainty and some degree of hard evidence, where the foundation for your judgment was not set in sand, but rather in cement. We're in a global world that never happened before, that went and did things that couldn't even be conceived of before. And they've all come apart. And the toolbox is totally empty, as proven by Mr. Modi and his big mistake in India. If you say he wanted to monitor and control, and that was the reason he did it, it's monitor and control nothing. If he wanted to stop criminal activity, absolutely no account. Criminals will use another currency, dollar maybe. He just made a complete, absolute fool out of himself. And in the process, destroyed a great country economically and took the price of gold to where it's going to go anyway, 3,000 to 4,000 or more, proving that gold can sell at that price. But look at it, it's actually an inflection point in India, an inflection point in the U.S., an inflection point today because of where markets are. Inflection points, in my opinion, don't exist anymore. If you call this an inflection point in the Dow, and then remember the best performing market in the world recently was Zimbabwe during the devaluation, what's to stop the general equities from going to unimaginable numbers? There are no markets. As there are, and any idea that you can trade a market is absolutely a contradiction in terms and an oxymoron because there is no market. You can't time nothing. You can't time virtual space. We have destroyed markets. We've destroyed capitalism. And it's going to become absolutely evident. Because what is the market? The market is the heart of capitalism because the markets allow when things get extreme, like a safety valve, they blow off. It used to be once every 4 years. Now, because we don't allow blow-offs, the heart of capitalism has suffered a cardiac arrest. And it's not hard when you look around at how businesses are run, how decisions are made, how certain companies are bulletproof where the rule of law is concerned, where the rule of law in the marketplaces does not in any way guide the large and great names. It's used every once in a while on some poor sap just to show that it still exists. Meanwhile, the same crime is committed every day, every way by the big names. So if we go back to the semantics of the words that you opened our discussion with, and that's the inflection point, sure, you could set a high for the Dow, sure. You could set a low for gold, but who in the world knows you won't see it again? In fact, the only market I think that will reach a high and not fall from it is gold. What other markets do depends on what computers do.
So what's the end game? I mean, what happens then with the end game? Because this can't, you're not saying this could go on in perpetuity, right? I mean, this can't go on forever. I mean, to me, if there's no release valve, there's no blow off, that just means it's just a pressure cooker that keeps building and building and building until it, you have another Boston Marathon event, right?
Until it becomes obvious capitalism is dead as a doornail. Okay? And when you've killed markets, you have killed the golden goose. When these geniuses from schools of a technological background, not of an economic background, started to control the markets, what there is and has been is a shark eating fest. And at first it eats the investors. Not a whole lot of them around. And then after it finishes eating the investors, it eats the speculators. Now the sharks are having a wonderful time. That's the international investment banks and institutions and hedge funds. But there comes a time when you've destroyed every group except what? You. Right now, they're eating each other. And the eventuality is, getting back to your steam pot, there's going to be a day when there's only one shark left, one very fat shark left, and what happens next? that shark starves to death because it ate all the food. So the end of this is the explosion of that steam cooker, which is called capitalism.
What about this 10-year Treasury bond going up? And this may be part of the, I can hear the steam singing at a very loud pitch. I mean, the 10-year Treasury is 1.80%. I've been talking about this on my site. It's up to 2.4%. That's a huge move in a short amount of time. It was 1.5% in July, 4 months ago. Bloomberg is saying there's 1.7 trillion lost in the last month. And with a big yawn almost. And what's going on in the background? How does the world lose $1.7 trillion in value in the bonds, and everybody yawns? I mean, what's going on in the background?
There's more money around than you can even conceive of, created by the supposed rescues to the banking system, which really filled up the debit holes of the over-the-counter derivatives. And because the over-the-counter derivatives have grown massively beyond world money availability. And this has no precedent. This is going to kill. We have killed capitalism. Thanks to the high tech guys, they have shot the goose with the golden egg. Markets, if you go in and take a look at the New York Stock Exchange, when I was down there, you'd have 1,000 people there. Now you got 35 maybe. The market is killed, and Greg, and there is no market in anything, including gold or silver, except as it's utilized to try and put some sense and rescue back into the whole system, and because there is no other alternative. This is what Trump has inherited.
Do you think that rising rates could cause the pressure cooker to get closer to exploding?
If rates break through, it's going to turn the algorithms away from everything else onto one thing, the largest market in the world, interest rates. And you're going to have the fastest move in interest rates, just like when Trump was elected. That's what the interest rate market is going to look like. And that's going to have an impact on every single derivative that's out there, because every derivative has an interest rate criteria. So you have a pressure cooker bomb cooking, okay, like the terrorists use. It's cooking, all right. And it makes gold a storehouse of value, not a currency, just a storehouse of value. Turns it into a savings account, the only one that will work. The only one without a counterpart. The only one that doesn't require a daily market that can trade in physical and in huge size physical. China and Russia aren't buying gold as some sort of an investment program. That's nonsense. They're buying it as a policy because they see clearly that there is no tool left in anybody's toolbox to fix what the geeks have done. They've killed us. They've killed themselves. There's one fat shark out there that is now about to experience starvation.
They're going to starve at a very high rate, aren't they? I mean, they're just going to end up with nothing. I mean, I guess the bond market will explode, and all this bond debt's going to be rendered worthless. Is that the path we're on?
That is the path we're on, including equities. I mean, equities will go to some outrageous price if what I've told you is correct, and it is, because we've got so much precedent in history for how equities operate in hyperinflation. But when it's all done, there'll be a catastrophic big bang. And then the only thing I think that will be left is your savings account. And your savings account is not silver, although it will outperform gold. Your savings account is going to be gold. And it's going to happen because all currencies, even the roaring dollar, is falling in terms of being a storehouse of value. Do you really think that you're okay to have everything you've ever worked for in your life in a dollar trading at 101 plus? Why? What makes you think it's going to continue? What makes you think that the machines won't turn on the currencies and make things happen that have no economic reality behind them? I mean, does earnings mean anything in shares? How about you take a stick and put a piece of Velcro on it, and you stick it on a camera, all made by somebody else, which then you superglue to your forehead? That was worth $100 a share. That's madness.
GoPro.
Yeah.
GoPro.
That's madness. Okay. So you have this is the mind of a machine. A machine has no soul. A machine has no economic judgment. Okay. A machine operates basically on a pattern of instructions that if this happens, do that, and if that happens, do this. And when it all goes in one direction, all machines must do what? Go in the same direction. So who's to say that anything has reached a high or reached a low? I have to fall back and say I've worked 56 years in this industry, and that's dating me a little. But my desire is to stand on and own, just like I did in the 1970s, more gold than any other person in the world, and sell and process my gold when the price is right, period, end. Because I suspect that gold will become the linchpin of whatever rescue mechanism is determined that nobody yet knows. And China and Russia are going to run the world because they've made this decision, and many other good ones, like the Silk Road. But they've made a decision that we are buying this because we have a policy that says fiat currencies have no capacity to be storehouses of value. They're only mediums of exchange. And they'll remain as medium of exchange. The dollar's not going anywhere. It's just that your suit might cost you $10,000 and it'll be hanging on a rack in a discount store.
What about this Italian thing coming out? This is the early Sunday release, and it may end up releasing Saturday. So anyway. But what about this Italian vote that's coming up that on Sunday? And this is going on actually by the time this thing airs. And the no vote is, the yes vote is not really much better than the no vote. The referendum to consolidate power basically in Italy so they can get reforms finished. But Draghi's saying if there's a no vote, he's going to have to buy bonds and buy all this debt. And Italy's, what goes on with that?
Well, first for Draghi, where's he going to get the money? Okay. He doesn't have the same creative processes that we have here at the Fed. He can do it to a degree, but not to the degree he'd have to. All right, there's the argument that wouldn't the euro be worth more if you got rid of the major weak sisters, and there is some logic to that, but not much. There is what we've been talking about since the beginning of the interview: the fact markets don't exist in the euro either, and that the euro may start and has already been moving generally in one direction. I would say this vote, either way, but especially if they took a hike, is the end of the euro as it was originally intended to be, and maybe the end of it, period.
Well, what about war? What about the war card? Does the pressure cooker get thrown on a bonfire and explodes faster if we get a major war? Erdogan is basically out public statements saying he's invading Syria. He's going to remove Assad, and I don't know how he's going to remove Assad without removing the Russians. And is NATO behind him? Could we get a giant whopping, honking, knockdown, drag out war? And if we get a war, do we get the pressure cooker explosion?
A war would be putting everything in a very high neutral, okay? Because war creates nothing economically, but it does excite markets with victory and defeat. But economically speaking, once you build a cruise missile and shoot it, it's gone. So where is the carry through? Where is the trickle down or the trickle up when what you built you just blew sky high? There's a significant amount of people in the United States who want war. And I think that as odd as it seems, the candidate that lost would have us in a war much sooner than the candidate that won. I would say that the opportunity to have a real detente with Russia is prime, and it should be taken. War will just give you more of what you've already got. Markets in virtual space with no relationship to earnings, no relationship to fundamentals, moving as formulas dictate they should move until the whole game drops dead. And capitalism is finished. I don't know what the next thing is, but I can tell you, over. Because the heart of capitalism is markets. Without markets, you cannot have a capitalistic system. It's over. And war might buy you time, but it's not going to buy you prosperity at all. It never has and never will. It breaks countries. It doesn't build them.
If you so the end result of all this, when do you think this end result, being capitalism is dead, there are no markets, when does this, everybody's sitting here thinking, when's this going to blow up? Because I have people every day who are mad that this hasn't blown up. You know, why do you keep saying that? We've reached all-time highs in the NASDAQ, all-time highs in the Dow. And I have I'm having a hard time saying, well, I mean, it's going to happen quickly. It's going to blow up, but I'm not a market expert. So the absolute end game, what is it and when does it happen?
Well, number one, how do you time something that doesn't exist? How do you time a virtual market? What is the tool you use? This is going on until it breaks. And when it does, it will be a different world between a Friday and a Monday. And all the belly aching that people have because they own the only item that's going to maintain buying power and has for the last 2,500 years, gold, is being played with by these machines on a paper exchange. They're going to wake up on Monday and find the only market for gold is physical, and the primary market makers are in Russia, Singapore, and in China. And they're going to get the shock of their lives. It doesn't matter if the dollar is 2 on the USDX. The whole USDX is falling through the floor. So what difference is the relationship of the dollar to the other few currencies in an index of which the bottom is dropping out? It doesn't mean a thing. What difference is it if the Dow is 19,000 or 30,000 or 10,000? The system is broken. There is no repair. One thing that's out there that will be which will be the kingpin of setting up something new is something ancient. It's gold. The only thing that will keep you with the ability to buy your lifestyle back again is gold. But is today the absolute low? Or was 1918 the absolute high? Not a chance. Not a chance at all. Be like Russia or be like China. Goes down, they buy it, they smile. Because they know exactly what's going to happen. When is it going to happen? It's hard to see what's going on right now continuing for a very significant additional period of life. It doesn't depend on when the economy craters or if the economy even craters. We've created a debt problem that we have had no action to rail in. On top of it, who looks like the biggest fool in finance? The Federal Reserve. Oh, we're going to move that rate 0.25%. Meanwhile, the rate runs right past it. Who makes interest rates? The Federal Reserve or the market? Or the virtual market? The answer, the virtual market. Just showed it. Yellen had nothing to do with what's going on out there today. Nothing, period. And she can't control interest rates as she tried, up or down. Because too much money is seeking too much profit in a sense of automation, which will grow until it blows. But it is at a point now where it's destroyed everything out there that was there, that we went through before, and therefore we're at the point of one fat shark with no more sharks to eat. How long does it take for the shark to die of starvation?
Well, last question. Could we end up with a Mad Max scenario until the new system, which will be something ancient, the new system takes hold? Could we end up with a Mad Max type scenario where...
All at the same time, yes. All at the same time. Because when it gets so bad, as it did in Weimar, people will accept something as a solution, which is really not a solution. The Rentenmark was no solution. The Rentenmark, which was said to own the real estate of Germany, did not own the real estate of Germany, but it turned the whole thing around. What comes after that is what's important to me. I've spoken to the greatest minds I know, and nobody anywhere can see a precedent, and nobody anywhere can see this continuing forever without the steam cooker blowing its top.
Jim Sinclair, thank you for coming on and taking us to school and putting your fabulous brain on display. I really appreciate you coming on and telling us. I mean, a lot of people want these definite answers, but your definite answer was there are no markets and it's going to blow. You better be ready. Is that a good summation? And
if you don't believe it, go to the New York Stock Exchange and get the shock of your life when you see a gallery with nobody in it.
Jim Sinclair, jsmindset.com. His business partner is Bill Holter, the Holter-Sinclair collaboration. You guys have your subscription service. You guys do interviews, podcasts. You have some free information on jsmindset.com and also your subscription service, which is fabulous. You interview all kinds of people. You even interviewed me, which that was probably low on the totem pole. But anyway, Jim Sinclair, thanks for joining us today on usawatchdog.com. For you YouTubers and people on the site, I'll put links to JS Mindset after the interview and also to the subscription page. It's worth it to hear Jim Sinclair on a regular basis. It's a treat for me. Jim Sinclair, thanks for joining us.
Greg, one quick thing if I can.
Sure.
You're the man that will be seen by history as transforming MSM, the big lying and fake news, into real news brought on by the public.
Thank you, Jim. I really appreciate it. I know we got a little bit low light situation here, but thank you so much for coming on. Really appreciate it. Jim Sinclair, the great Jim Sinclair of jsmindset.com. Thank you, sir.
You're welcome, and you're a hero.